So yesterday was Fed Day and it's fireworks in the markets because the Fed leaves rates unchanged and they even indicate 3 rate cuts for next year. So stocks rallied yesterday. The Dow made a new record high, but will this rally continue today or will it fizzle out? And how does this affect our open positions? Also, we had an economic report coming out today that could turn the markets around. Anyhow, we'll talk about this. So welcome to Coffee with Markus and Morgan. Today is Thursday, December 14th. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And Mark, I don't even know, where should we start? Do we need to start with what happened? Let's take a look at a 5-minute chart of the S&P 500 and see what happened yesterday. And I don't even know. There we go. Now we are connected.
Yeah, what a day, Marcus. What a day. So Powell and his Fed fireworks moving the markets yesterday, leaving the Fed funds rate unchanged, which was expected. But that statement got traders going. A nice little rally there. There was a press conference 30 minutes later in some more upside, pulling back a little bit in the afternoon, but then ending the day near session highs. And the Dow closing above 37,000 for the first time ever.
Right. And we see that there's a little bit of follow through. So let's dive in and let's talk about the statement. Because if you look at the 5-minute chart, you already see in the S&P 500, the statement started to move the markets. And then we got to talk about Powell's press conference and what happened there. So let's dive into the statement. So the first thing that you saw in the statement was that they removed the word any. And this is where everybody got excited about. So the committee would take multiple factors into the account for any more policy tightening, a word that had not appeared previously. So this basically, this word any is indicating the Fed believes that we are where we need to be, or that they are where they need to be.
Yeah, and I think that for the first time in a long time, we're hearing comments from the Fed that could be viewed as being dovish, right? You hear the dovish versus hawkish. And so if the Fed is tightening with policy, becoming more restrictive, concerned about inflation and raising rates, or likely to raise rates, then they take a hawkish tone. If they're thinking more about loosening and having more accommodating policy, then it's dovish. And that was a big shift because we just haven't had that in a long time.
Yeah. And I think the other important sentence that was in there is this one from Powell, that inflation has eased from its highs, and this has come without a significant increase in unemployment. That's very good news. Because in the beginning, when the Fed started raising interest rates, Powell made it very, very clear that in order to get inflation under control, he would be willing to drive the US economy into a recession and drive unemployment higher. In fact, he said he has no problem if unemployment goes above 5%. Now they're projecting that for next year, unemployment will go higher from currently 3.7% to 4.6%, but this is way less than they originally anticipated.
Yeah, and we know what took place where, supply chain issues and maybe inflation coming back under control a lot sooner than it actually did. And then it just spiraled out of control. So it was clear that the Fed really had no intention to focus their attention on unemployment numbers because they needed to do something drastic. And so I agree. In the situation that we're at now and Powell saying this, this was best case scenario once it got out of control.
Yeah. Now, the other big thing is that they actually say there could be 3 rate cuts next year. And that's a difference from previously. They talked about 2 rate cuts. So from 2 to 3, this is where also everybody said, okay, seems that they're done hiking rates, and we start the discussion about when to lower rates. Because, kind of until this meeting was still like, okay, will there be another rate increase next year? There were still probabilities. So now we are stopping the discussion to talk about hiking rates, and now we are talking about lowering interest rates. And that's a huge shift. Together with what you said, the good news from the economy and the employment market, meaning that we actually could have this so called Goldilocks scenario that inflation comes under control without going into a recession and wrecking the US economy.
Sure. And we know that the Fed funds futures and investors have been overly optimistic over this whole hiking period and campaign. But that was a big shift. The dot plot that comes out quarterly, and like you said, September, hike was on the table and maybe two cuts in 2024. Now the hike seems off the table. It sounds like they're done raising rates, and we're looking at three cuts in 2024, where investors are saying, hey, you know what, Fed, I think we're getting five cuts in 2024. So we'll see who's right. But that shift in policy with that dot plot definitely optimistic, or leading to optimism in the market.
Right, and one of the things that you're leaving out in the dot plot from September, there were two hikes in there, two hikes this year, and they're gone right now, and then two lowerings next year, and now they increase to three. So that's just a thing. And yeah, talking about traders being overly optimistic, look at this. I mean, come on, seriously. Now traders are factoring in that the Fed will lower rates as early as March, and traders are factoring in one, two, three, four, five rate decreases, where the Fed said, hey, three. But traders are saying right now, all right, dear Fed, you were already wrong. You said that you would hike two more times, and this turned into a big Fed zero. So we believe that also here you will lower interest rates quicker. I disagree. I don't believe in five rate cuts next year, and I do not think that it will happen as early as March.
I agree, Marcus. I think that this is, the optimism is there, a little bit overly optimistic. It's totally going to be based on data, right? And I think that concerns in the economy, if there's that shift there, will lead to an earlier hike. But I think a March hike, it's ridiculous at this point. Or sorry, not hike, cut. My
Yeah.
apologies. But I think a March cut is ridiculous at this point, because I think that the Fed is going to be very cautious about that first cut unless it's because of a weaker economy. But maybe the May is on the table now, where before yesterday's statement, I was thinking June or July would be the first time they cut. I would give May a go, but March, I think that's too soon.
Yeah. And you see, this is where we're looking at the 10-year interest rates right now, and it seems that the market is falling quicker than the Fed is actually wants it to do. So here we are now below the 4% rate right now. I mean, this will be good for mortgage rates. They will come down again. But that's not necessarily what the Fed wants to see. So I'm sticking with the June rate cut here. I
Okay.
don't think it will be May. I think that the Fed will wait because did you see the economic report that came out this morning? So I think that's another thing to factor in. Core retail sales. Retail sales came out was supposed to decrease because supposedly the higher inflation and higher interest rates is supposed to hit consumers so that the
Yeah.
economy is slowing down. But it increased both retail sales and core retail sales. So, I
Yeah.
mean, this is
More
where the
spending.
Fed needs to be super careful that right now it's not overheating again. And we have this nice trajectory in the inflation. And we need to make sure that this is not ticking up again. And reports like this, where it is expected that these higher interest rates are hitting consumers and that inflation is hitting consumers. And then, oh no, everybody's just still spending like crazy. It's like, okay, we shall see.
Yeah, a few things going on, but that inverted yield curve with the 5 and 10 is no longer, still an inverted yield curve on the 2 and 10, but that 10-year yield coming down below 4% for the first time since August. So that is a positive.
Yeah. So then, looking at the fear gauge, I mean, we are still hovering around 12. So it seems that some are a little bit concerned and saying, okay, maybe it could happen that we went a little bit too far, too high, too far. Because look at this. I mean, in the Dow, this move here, I mean, that's a 15% increase. For the Dow, that is a lot.
Yeah, but we're still at 4-year lows on the VIX. So I
Yeah, I
mean,
know. I know. I hear you. It's interesting. It's interesting. Okay, a few things. Adobe, Adobe. There we go. ADBE. Reported earnings, and traders do not like this. Adobe down almost 6%. So, is this a possible candidate for an earnings play for us, Mark? What do you think?
well, with the markets higher today, the opportunities were few for wheel entries, right? Typically, it's better to sell puts on down days. So this is where looking at earnings plays is a nice way to potentially pick up a trade or two. But there's two things that I want to make a decision on when I'm doing an earnings play. I don't just trade it because it's down and there's premium there. One, is it a stock I want to own? And two, do I see some support? And Adobe, hey, I haven't really looked into it if I really want to own it or not. It does have a high PE ratio, but the price I want to own shares at, I see stronger support a little bit lower. So this wouldn't be one for me.
Yeah, I agree. But this was kind of the only thing that would have been possible today if you're looking at selling puts with a super strong market like this one. By
Yeah.
the way, solar stocks, we'll talk about more about our position, but solar stocks like Sunrun, I mean, look at this. Yesterday up 20%, today up another 18%. And this is helping our CSIQ position as well.
Yeah, that's awesome. Pfizer, another one down after yesterday, but again, we talked about it yesterday. That is just bleeding down, down, down. I would not touch Pfizer.
No, no, not at this point. We've traded in the past, but at this point, no way, Jose. All right, let's talk about our positions here. So, we you know what? Before we do this, our holiday calendar, the 25 days of Christmas. Today is, what is today? The 14th already. And today we do have ugly Christmas sweater contest. And we do have the first already posted. So here it is from Stefan, here from Anna, Robert,
They're
yours
so fun.
truly.
There you go.
Yeah. So, and I mean, the postings are coming in. It's lots of fun here. Yesterday we had the favorite eggnog recipe. So if you want to participate in this, please do. All you need to do is go to rockwelltrading.com/holiday. This way we'll send you an email every day so that you see what's happening here with our holiday calendar because we have still 10 more days to go. So we have quite a few surprises for you. So just go to rockwelltrading.com/holiday. I'll put a link in the description here after we are done. All right. So let's hop over to our positions. And first up, CSIQ. A couple of days ago, we were talking about rescue missions. Now, I mean, massively up. I mean, rescue mission for now off the table. So we'll see what happens here, how CSIQ behaves. But nice to see it running up to now 24, 23 after it was touching 21 just a couple of days ago.
Yeah, at this point, I'm liking the move higher. And sure, if we get back into that range that we saw earlier in November, still on the table for me. But right now, with it pushing higher, I'm not adding to it, and I'm seeing where this goes.
Yeah, exactly. I mean, if this continues to move higher right now, or if we have a pullback, originally I thought about a rescue mission at 19, then we were talking about 20. Right now, I'm getting interested at 21 to fly a rescue mission here.
Sounds good.
All right. Then NEE, that's another stock where we never flew a rescue mission because what happened here is that we dipped down, and before we could establish support, we were going back up. We finally broke through the 62 level where he said we need to break through the 62 level. So today up another 1.5%. So this also right, nice run up. Still needs to go a little bit, but if we can stay above this magic 62 level here, I'm very confident that this will go up to 69.50. Maybe not this year, but next year.
Yeah, I'm loving that pop break to the upside, and that works for me.
Yeah. Oxy. So super interesting. Got a sign at 57. Sold on Monday the 58 call. Bought that bag yesterday. I sold the 57 call. Right now trading at 59.22. Unless we see Oxy pulling back, I'll get called away here. So this is a super nice 1 week trade that we had here because got assigned, getting called away. All within a week, picture perfect wheel trade. And then I'm interested in possibly selling the 57 puts again next week if I can.
Like the idea there.
For you, ExxonMobil, for you, it was all about the 100 level. You chose to sell puts at 100, got assigned, sold calls at 100. Right now, trading at 101.14. So, what's your plan here, Mark?
I am okay getting called away, but I did look at a possible roll this morning and not a lot of premium there. I'll take a look tomorrow. But with this enthusiasm here, I wouldn't mind getting called away. And then if there is a little bit of a pullback, putting on a new position or taking the 100 again, or, even lower if it's available. But right now, most likely getting called away.
Yeah. All right, and then we have PNC. You already called away, and PNC right now for banks, of course, the possibility of lowering interest rates. That is good because it means less credit defaults, and again, handing out more credits. I mean, the demand for credits is going back if interest rates are super high, but if it is lower again, then it's going back. So super big run up. I sold the 143, so above my cost basis, unless PNC pulls massively back tomorrow. Also for me this week, time to say goodbye to our old friend PNC that we have been in since March. So it has been a while, but you're already out. I might be out by the end of the week until something drastic happens today and tomorrow. And this also yielded some nice premium and for me some additional money on the stock. So $1.50 per share. So that's all good. It's all good.
Nice job there. And patience and discipline, right? It was a little bit of a bumpy ride, but we knew it was a quality stock and held through that difficult period.
Yeah. UPS, another one. Holy cannoli. UPS keeps just going. I mean, UPS, we need to actually switch over to a 5 minute chart so that you see what happened here with UPS. Because UPS, I actually at some point it started to move higher, started pulling back. So this is where I decided to sell the 160 call. And I got a lot of premium for this. I got $2 for it, which is really, really great. And the reason why I sold the 160 call is because I got assigned at 157.50. So at 160, we can actually hop over to the calculator. It will turn out really, really great. So where are we? Here. So I was able to collect $2,400 in premium by doing so. And since I got assigned at $157, I would make $2.50 per share that I have, and I have 1,200 shares. And this where I need to zoom in a little bit so that I see it would be an additional $3,000 on the stock for a total of 5,400 if we stay above 160 until next week.
Nice. And yeah, I'll be honest, I got a little distracted here because when I saw that pop higher, I started looking at calls for me. I was assigned at 165. My break even's around 162. So this is working out nicely. But the 165, I need about $1.25 right now. They're at 90 cents approximately.
Yeah.
So I probably need this to move higher by another buck before I could sell calls, according to my plan. But I'll take it. Nice move with UPS here.
Yeah, especially UPS since it is now trading at session highs, while overall in the markets we were moving lower here. So I mean,
Yeah.
after the fireworks yesterday and this morning, the enthusiasm is fizzling out a little bit. So it's always good to see that when the markets are moving lower and one of the stocks that you're in is still trading at session highs, that just shows that this is a super strong stock. Super strong stock. Ugh, say this 10 times
10 times
fast.
fast.
Anyhow, so that's what we were looking at here. And I'm okay with the 160 because I'm okay getting called away. I was happy to collect a lot of premium, lowering my break even by another $2. I haven't entered this in the trading log just yet, but this will lower my break even to 148. So if for whatever reason UPS decides to move a little bit lower, but I think now that we are above the 157, what acted as resistance probably now acts as support. And I mean, dude, I hope for you that it just keeps marching higher.
I'd like that.
Yeah. So definitely fireworks in the markets, fireworks in our portfolio. Let's see where we stand today at the end of the day. I think that we will probably pull back towards the unchanged mark because I think the 4,700 here in the S&P will act as a magnet. So I think that we'll pull closer to the 4,700 today.
Yeah, but what about your stake zone, Marcus?
Yeah, we were moving far away from the stake zone here. But hey, come on. When I did put the stake zone on, I mean, this is when we were trading right here at around 41, 41.50, right? I mean, this is when I put the stake zone on. And this is when everybody said, nah, it's not going to happen. And I mean, who knew that we would not only make new highs for the year, but right now we are only 2% away from making new all-time highs in the S&P, and we already made them in the Dow. I mean, come on, that's kind of crazy. We
Hey,
were talking about a correction.
I know. No, it was a great call. I liked the call. I just thought it was too narrow. But Doug, one of our mastermind members, sent me a nice little branding iron to put my initials and signature on stakes. So I need a couple more stakes to use that kind gift from Doug. So I'll
Hey,
take it.
I'm okay. And you know what? I'm even more okay with being wrong to the upside. I think I would
Sure.
be a little bit sad if I was wrong to the downside and I would
True.
have to send you stakes. But I mean, with what's going on in my portfolio right now, I mean, these are nice 5-figure days. So I'm very happy with that.
I'm with you there. I'm with you there. Okay.
All right. So we will continue watching our positions, especially the calls. And tomorrow we're going to talk about whether we are rolling these calls, whether you have an opportunity in XOM, whether I have an opportunity in Oxy, or if we get called away. So if you enjoyed today's show, click on like. And if you feel that others could benefit from it, do us a favor and share the show. There's a share button right underneath. Share it on Facebook, share it by email, share it on Twitter, wherever you think it might be a good place to share. And if this is your first time here, hope that you enjoyed it. Consider clicking on the subscribe button because this way you'll get notified whenever we go live. And okay, click on like. And then we'll see you again tomorrow.
Happy trading, everybody.